The interest in investing from retail investors, folks like you and me, has exploded since the pandemic. Probably one of the few positives from the pandemic. But this is a great thing because this is more people thinking about building wealth. And I work with investors each and every week as an investing coach, helping them put together a plan, showing them how I analyze and value stocks, all with my ultimate goal of helping them build generational wealth. My motto remains the same. I'm constantly looking for high quality assets at great valuations. But in today's video, instead of talking about my portfolio and stocks I'm buying, we're going to take a look at what the big money is buying. The biggest hedge funds, the most popular investors around the world, since those 13F filings have just come out showing all of their buys and sells for the first quarter. So we're going to take a look at 8 different investors showing you their top buys and sells during Q1. So make sure you stay tuned throughout the entirety of today's video so you don't miss any of that. And before we begin, show me appreciation by simply clicking that like button down below. Subscribe to the channel and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into the video, diving into some of the most popular 13F filings. And before we begin, for those of you unaware, a 13F filing is a requirement for hedge fund managers, family offices, showing what were they buying on a quarterly basis. So all of these are as of Q1, March 31st, and they're not due for another 45 days. So they've all come out here in the middle of May, showing what these folks have been buying or selling. But again, as a reminder, they're as of March 31st. So anything that they may have bought during that period and held as of March 31st, they could already be out of it because here we are sitting in the middle of May. The investors that we're going to cover in today's video include the likes of Warren Buffett, Michael Burry, Stanley Druckenmiller, Stephen Cohen, David Tepper, Ray Dalio, Bill Ackman, and Ken Griffin. Let's begin with the GOAT in Warren Buffett to see what he and Berkshire Hathaway have been buying and selling as of the latest quarter. And in the latest annual Berkshire Hathaway meeting, he dropped a bit of a bomb, saying that he would eventually now start stepping away from his CEO role at Berkshire, but still maintaining his chairman role. So he's not going all that far away. Let's start with the largest purchases during the quarter. And the biggest add during the quarter was Pool Corp, which increased 145% with an ending value of $466 million. Others include Constellation Brands, Domino's Pizzas, SiriusXM, Occidental, and Verisign. Of all the ads, the one I like the best is not a stock I own, but rather one I've been looking at for some time in Domino's Pizza. Constellation Brands continues to be another big ad for Berkshire. So the approach that Berkshire is taking here is let's add to pizza and beer. Now let's take a look at the biggest sells during the quarter, which included the likes of Citigroup and New Holdings, which they eliminated from the portfolio entirely. They also reduced Liberty, T-Mobile, Bank of America, Capital One Financial, DaVita, and Charter. So clearly Buffett and Berkshire are trying to reduce their exposure to the financial sector, selling completely out of Citigroup and also reducing one of their largest positions in Bank of America. Also, throw in Capital One is a clear sign that he's souring on that particular sector. The top 5 positions in the portfolio currently include Apple, which there was no movement in the latest quarter, followed by American Express, Coca-Cola, Bank of America, and Chevron. Now we're going to move on to investor number 2, which is going to be Michael Burry. And if you're familiar with the movie The Big Short, then you're probably familiar with Michael Burry. He runs the hedge fund Scion Asset Management. Burry is known for having some heavy short positions and taking a much more pessimistic look on the economy as a whole. In fact, he eliminated pretty much all of his positions, holding 7 of them, but many of them are just option holdings. The biggest add was to beauty giant Estee Lauder, stock ticker EL. Again, really the only main shares he owns in his portfolio, with everything else actually being put contracts, meaning he's betting against all of those companies, such as Nvidia, Alibaba, PDD Holdings, JD.com, Trip.com, and Baidu, many Chinese internet names right there. Burry definitely takes an aggressive approach when it comes to options, buying outright put options. I utilize options on a weekly basis, but focusing much more on a cash flow narrative, looking to generate over $5,000 per month, selling a lot more options than I am buying. And if you're interested in seeing my option plays, then consider becoming an Options Edge Plus subscriber at my newsletter, The Stock Investor's Edge. Check out the link down in the description below. Now we're going to move on to investor number 3, which is Stanley Druckenmiller, which by many accounts, many investors that are out there that have been investing for quite some time, they believe he is one of the top investors of all time. After all, he had a 30 consecutive year run in which his firm achieved an average gain of 30% or more, which is quite impressive. Let's begin by taking a look at some of the top sells for the Druckenmiller's family office, which they oversee more than $3 billion in assets under management. During the first quarter, they cut Seagate Technologies by $114 million, fully exited their position in U.S. Steel, sold 21% of Coherent Corp., closed their position in Skechers, and reduced its position in United Airlines, stock ticker UAL, by 65%. Now turning our attention to some of the additions made to the portfolio in Q1, which included DocuSign, which was a brand new position for the firm, increased its position in Taiwan Semi, a huge addition, increasing by more than 450%. They increased their position in Teva Pharmaceuticals, stock ticker TEVA, and added a small position in Insmed, stock ticker INSM. Taiwan Semi is by far my favorite addition within this portfolio right here, but DocuSign is definitely one that I want to take a second look at as well. In terms of the portfolio as a whole, the top 5 positions currently include the likes of Natera, Teva, Coupang, Woodward, and Philip Morris. Now moving on to investor number 4, which is going to be Stephen Cohen. And for those of you that are sports fans out there, Stephen Cohen is the owner of the New York Mets. He also happens to be the hedge fund manager of Point72 Asset Management, in which they have $40 billion nearly in AUM. During the first quarter, the biggest adds Cohen had to the portfolio included Canadian Natural Resources, Meta Platforms, MongoDB, Analog Devices, Bank of America, Charles Schwab, Corning, and Capital One. And there was another 31 positions that were added to as well. And this is why it's always interesting to look at these 13F filings to see what these big hedge fund managers are adding or trimming from their portfolio. We looked earlier at Buffett. What was he doing primarily? Reducing his financial exposure. But then you turn around and look at Stephen Cohen, which I don't think anyone's going to say that Stephen Cohen is just as successful as Warren Buffett, but he is very successful. But he's taking a much different approach. In fact, the opposite, by adding to a lot of financial names. Whether we talk the likes of Bank of America, Charles Schwab, or Capital One, it's almost like he bought those shares from Buffett. Notably, Cohen and Company did not close any positions during the quarter, but their largest sells in terms of percentage included Nvidia, which they cut their position in half, Autodesk was cut by 35%, FedEx was cut by 25%, their Amazon position they cut by a quarter, Taiwan Semi they cut by a quarter, Adobe was cut by nearly 20%, Boston Scientific was cut by 16%, and Microsoft cut by 13%. So again, Buffett cutting financials, Cohen adding to financials. Then we looked at Druckenmiller, huge adds to Taiwan Semi, Cohen cutting Taiwan Semi. This is, after all, what makes a market a market. As of the portfolio as a whole, Point72's top 5 positions currently include Danaher Corporation, Amazon, Microsoft, Sea Limited, and the Walt Disney Company. Now we're moving to investor number 5, which is David Tepper. We're going from one sports owner to another. And again, for those of you that are sports fans, David Tepper is one of the owners of the Carolina Panthers within the NFL. During the first quarter, Tepper made some well-timed moves, trimming his exposure to many Chinese internet names prior to these trade tensions ratcheting up. Here's a look at the top holdings within the Appaloosa firm and the changes that were made to those during the last quarter. Alibaba was cut by 22%. PDD Holdings, another Chinese name, cut by 18%. JD.com cut by 23%. And then they made some moves to some of the largest companies in the US markets with Amazon and Meta and Alphabet, slightly cutting Amazon while slightly adding to the likes of Meta and Alphabet. Of all the moves here, my favorite was that last one on the list, which was a 113% increase to the position in Uber Technologies, a position that I've been pounding the table on to all of those within my Discord community, and it has been flying high. I also wanted to note that they started a brand new position in that of Apple, which doesn't excite me all that much. Going back to this chart though, at the very top, actually the largest position, was a huge bet that Tepper made against the fossil fuel reserves free ETF, stock ticker SPYX, a put valued at $2.5 billion. The ETF invests in companies that are free from fossil fuels. Many Mag 7 names are found at the top of this ETF's list of holdings. And that leads us to investor number 6, which is Ray Dalio. And Ray Dalio has been in the news a lot lately, more recently talking about the Moody's downgrade, being that this US Treasury market is much worse than many of us anticipate. However, I should note that Dalio often takes very pessimistic viewpoints. During Q1, Dalio's Bridgewater Associates opened new positions in Netflix, United Airlines, Chubb, and Goldman Sachs. The firm closed out of positions entirely in 3M, Amgen, Herbalife, Teva, and Ulta Beauty. They added to prior positions in Alibaba, Microsoft, and PayPal, and trimmed positions in Nvidia, Lam Research, and eBay. The top positions within the portfolio overall include the S&P 500, IVV, both of those S&P 500 ETFs, followed by IEMG, BABA, and Alphabet. And now for investor number 7, which is Bill Ackman. And Bill Ackman takes a very different approach than many of these other hedge funds, because if you looked at their portfolio as a whole, it would be 50, 100 different positions. Ackman believes less is more. He usually has positions in his portfolio that amount to maybe 10 or so names. Right now, he's sitting at a dozen positions. Here's a look at all 12 positions, which include Uber, Brookfield, Restaurant Brands, Howard Hughes, Chipotle, Canadian Pacific, Alphabet, both shares, Hilton, Seaport, Hertz, and Nike, which he has now exited completely from his Nike position. So really, only 11 positions now. As you can see, the largest position in Uber is actually a brand new one. Again, a position I love to see. Brookfield Corp is second, which saw an increase of 17%. Hilton shares got cut by nearly 50%, and as I mentioned, Nike, he's out of completely, one that he lost pretty bad in. And that just goes to show that even the best investors aren't right all of the time, even if they have some inside information. We just need to be right more than we're wrong. And that brings us to investor number 8, which is going to be Ken Griffin. This is an investor that I actually like a lot, and he runs one of the largest hedge funds around with assets under management over $100 billion, and that hedge fund is Citadel Advisors. One of the reasons I like Ken Griffin is because he takes a much more balanced approach. You'll find dividend stocks, you'll find high quality growth stocks, but you'll also find that he's not afraid of taking some flyers on some early stage companies, but you'll never find it being an oversized position within his portfolio. Here's a look at the top positions within Citadel, and all of them were added to during the most recent quarter, with the exception being Hess Corporation, which was cut slightly by just 5%. The biggest addition came by way of Schwab, which is now the largest position in the portfolio. QQQ was put back into a sizable position after nearly exiting in the prior quarter, and then mixing in some dividend plays with Medtronic, Home Depot, Keurig, and Gilead. The biggest cuts to the portfolio in terms of percentage were UNH getting cut in half, which ended up being great timing. Meta was cut by 44%, Amazon cut by 44%, AT&T cut by more than 40%, O'Reilly, Eli Lilly, Cardinal Health, and Capital One all getting trimmed by more than 10% within the portfolio. So again, these 13F filings are as of March 31st, so a lot could change in the 45, 50 days later now. So take all of these with a grain of salt, but it gives you a good idea on what some other investors are thinking about. We saw a lot of them trim positions in Chinese internet names. We've seen some positions in technology names coming down, but it's going to find varying different opinions across the board, and that's why it's interesting to look at, but I never make any investment decisions purely based on what other investors are doing. I'm going to stick to my plan and my strategy overall. So thanks for watching, and again, if you haven't done so, hit that like button down below. Let me know which of these investors in the comment section down below is your favorite investor. Who do you believe is the best of all time? I have a feeling Buffett's going to be on there a lot, but don't be shy. Throw it in the comment section. It helps with the algorithm. So thanks again for stopping by, and we'll see you in the next one. Take care.